An accountant's advice that benefits every business owner, part 2. If you're new here, hi, I'm Michael from MDH, your business growth specialist. Subscribe to be notified on our top tips when we send these out every week. Your accountant probably wants you to know these things, but you're a bit too busy to ask. Let's cover these few areas that will help benefit your business. This video is part 2, and if you haven't seen part 1, please click on our library below to watch this video first. Taxes you should know as a business owner. Now, I'm going to presume that you've got a limited company and you've got a scaling business and it's going upwards. So taxes you should know as a limited company are corporation tax. Corporation tax, okay, there are some adjustments, is a percentage of your profit. The second one is VAT. So unless you've got an exempt business, which could be something like a financial advisor company, it's likely that your business will be charging VAT and collecting it for HM Revenue and Customs and paying it over quarterly. It's really important that you understand this tax. The second two taxes are payroll taxes, and they're a combination of income tax and also national insurance as well, both employees' contributions and employers. So if you've got a team where they're under the PAYE system, it's important for you to understand these tax. As a side rule, if you've got a construction business, CIS tax will be a major part of your workforce, because self-employed construction people normally have a CIS tax deduction. They're the main taxes that I believe that you should know as a limited company. How tax is calculated. So let's start off with the first one, VAT. Currently the VAT rate as we sit here in 2024 is 20% for standard rated. Yes, there are some differences. There's a 5% and also 0%, but the majority of businesses in the UK are going to be a 20% VAT. That means you charge 20% on top of all of your sales and you collect it in and then pay it over on a quarterly basis. Now, on one side, it is an absolute ache having to be a tax collector for HMRC, and you do it for free. But the second benefit is you get 3 months use of that money that you can then use for cash flow. That's a win. You get the opportunity to deduct any VAT that you have on costs, so you pay over the net. That's another win, because if you're not VAT registered, you don't get to reclaim back this, what we call input VAT. So when you're looking at how these taxes are calculated, you collect it, you deduct the VAT that you've got on your costs, and you pay over the balance. The same goes for your team. So if you're deducting tax on national insurance, you will deduct that from your team members. So it's standard for a lot of employees to be paid at the end of the month. You will then pay them what they're entitled net, and the tax and national insurance that you deduct will normally be paid on the 19th of the following month. With smaller companies, there's some options where you can pay quarterly, but for the majority of companies we work with, they're going to be paying their PAYE on a monthly basis. Now, with corporation tax, you're going to pay this on your profit less some tax accounting deductions, and this will be 9 months after your year end. So just to keep it nice and simple, if you've got a 31st of December year end, you're going to be paying your tax the following September. Currently, as we sit here in 2024, you'll be paying a range between 19 and 25%, depending on how big your profits are for that financial year. If you're a larger company, there is a system where you have to pay your corporation tax quarterly, but that's for another video. The importance of a business plan. Now, I work with loads of business owners that go, yeah, they get really excited, they go, oh, forward, but what is your plan? Because if you haven't got a plan, you're just running around excitable and you could be going anywhere you want. It may not necessarily where you want to go. So I'm a big fan personally of really having clarity of what your personal goals are. And if you want this really basically is, if you could get to a point of where you could do what you want when you want without any fear of money, what would that be? And if that takes a bit of time to work on as well, is per year, what house do you want to live in, what mortgage, how many holidays do you want to go on, what car do you want to drive, what fun stuff do you want to do, as well as keeping the lights on board. If you have all of them stuff covered personally, that can lead into a business plan to see what you actually need to do to achieve that. Because it's not just about achieving the money that you need to live at home, you actually want to make extra money as well, which will allow you to reinvest in either extra investments, it will allow you to either reinvest in your business, and it will allow you to potentially even acquire other businesses as well. So you don't just want to shoot for what's a really nice amount to earn per month or per year, you want to be aiming for extra. So that way you've continually got extra money that you can reinvest and reinvest and reinvest to make your business and your life better. Now, once you understand that and you've got a real clarity on your plan, you just then need to stick to the plan. So make sure that you've got a plan. It doesn't need to be 47 pages long. It can be a few sides long, but it needs to be clear. It needs to be concise. everyone needs to understand it, including your management team as well. So every single business should have some form of plan, otherwise you're going to be going in a load of random directions. Everything starts with proper bookkeeping. This is one area that's always overlooked time and time again. And it may be on the outset not the most sexiest stuff, but if stuff not analysed and you don't understand it and it's not in the right positions, you are going to make rubbish decisions. You are going to lead yourself in a different direction, because if some bookkeeping that's wrong that says that way, when it's really that way, it's only your own fault. It needs someone who's diligent, it needs someone who's caring, and it also needs to use the current technology that's been out there for quite a while now to be able to use properly to make sure that you have sound bookkeeping going forward. So make sure you don't overlook bookkeeping as it's easily done, it's inferior, it's not really important, because it's massive. This is the foundations that you all based all of the decisions on for your business, so make sure it is right. Now, I really hope this video's helped. If you've got any questions that I can help with, I'll put my link below to Calendly. This allows you to book an appointment directly in my diary. We can get to know each other. I can table board any questions you have, and I promise there'll be no pushy sales pitch. But if you're looking a quick way to basically save a bit more money, click our book that's 70+ ways to pay less tax. All of these ways to save tax are good. Now, just make sure that they're getting you closer towards your personal goal, because otherwise you're going in random different directions. And download your copy today for free.